Good morning, everybody. Welcome to the Black Financial Channel. Today, we're going to talk about GameStop and a trader that just made millions of dollars on a really interesting GameStop trade. We're also going to talk about Dogecoin and the fact that Dogecoin is doing some really interesting stuff this morning. I'm going to break some of this down for you, so get comfortable, buckle up your seatbelt, hit the thumbs up button. We're going to get started on the Black Financial Channel right now. Hey, good morning, everybody. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. And today I want to talk about Dogecoin to start. Dogecoin is interesting. This weekend, Dogecoin took a nosedive early in the weekend. It went down by about maybe 30-40% almost, 25 to 30%, something like that. And then it made a crazy recovery. So now it's up to 41 cents right now. It actually went up 35% last night. 38% actually, 38.44% at the time of this recording. And so, this volatility is kind of crazy. In the last week, Dogecoin's gone up 473%, which is insane. And for those of you who've been making money, I congratulate you on that. You pretty much made money at the craps table. I mean, this is what this is. Dogecoin's not really an asset. It's really not. It's not even as valuable as say investing in Gucci jeans or whatever. Because the thing is that even with Gucci, there's some sort of inherent value that you can attach to it. But because people wear jeans and they wear clothes and they need clothes to do certain things. Nobody needs Dogecoin to do anything. Like Dogecoin provides no utility whatsoever to anybody because it's a figment of your imagination. But I think Dogecoin is really interesting because Dogecoin reflects the market that we're in. We're kind of in a crazy stock market where people will buy anything. And I encourage you to be careful about that because when that happens, it's kind of like a party where everybody's drunk and everybody's high. So people will do anything, right? And that's not going to last forever. At some point, the party is over. At some point, the chickens come home to roost, and that's what's going to happen. But if you're okay with that, if you're fully prepared for whatever economic bloodbath may be in front of you, then by all means continue to do what you're doing. Now, do me a favor, hit the thumbs up button, hit the share button, hit the subscribe button. Also put a hashtag B1 in the chat if you understand this is a Black channel. We are not just financial and Black, we are Black and financial. That means the word Black comes first. We represent the Black community. Black wealth is our number one obsession. Also, subscribe. There's the URL on the screen in case you don't see it anywhere or you're not on the Black Financial Channel. Make sure you subscribe and sign up. Now, with that said, so I mentioned you about Dogecoin. Who knows? Maybe for fun, maybe we'll just buy some shares of Dogecoin just as a group, and I'll show you guys what happens with the portfolio because I'm really intrigued by it. There's nothing wrong with wanting to have a little bit of fun, and I just always want to remind you that that's not the same as investing. Though investing is when you put your money into some sort of asset that has an economy around it, some sort of asset that has a network around it, some sort of asset that has a fundamental value that can be traced through mathematics or something like that. You don't want to just sort of jump into what is kind of becoming like a game of an economic game of musical chairs. Musical chairs is one of those things where everything's great until the music stops. When the music stops, then you're going to find out where you really stand. And so this market's going to crash. At some point, the stock market is going to collapse. It's going to all fall apart. It's not going to die. It's just going to crash. It's going to dip. The correction will be significant. It will be real. It's probably going to happen when the Fed decides to start actually tightening interest rates. When the Fed starts raising interest rates, you're going to see an earthquake, an economic earthquake that you can't even imagine. Like a lot of y'all going to be crying that day. But but then again, the recovery tends to occur. But I would not always assume that recoveries occur within, say, less than 6 months or less than a year. You may have to wait 3 or 4 years. In Japan, once the market crashed in the 80s and it did not recover until about 20 years later, right? So do not think that because the market dips that it's going to come right back the next week. The historical data does not support that point. Sometimes it's true, sometimes it's not. Just be careful, be thoughtful, make sure you're making good decisions. Another interesting story that I saw that was really, really good. Let's see here. I agree with you, Lemire. Lemire says, please, when talking about crypto, talk about protocol, not prices. Actually, if you want to know more about crypto protocol, talk to crypto experts about that because I'm not a person who is able to really break down from my knowledge how crypto protocols work and white papers and all that. I don't read white papers. I don't dig into those details. I talk to crypto experts, and that's a little tip on investing. You don't have to know everything yourself. You don't have to go through and break down all the financial reports and go through all the numbers. You just talk to an expert who does that. There are analysts, thousands of analysts who break down assets all the time. And if 10 experts on a given investment, if 9 out of those 10 say buy, then I'm going to buy. If 9 out of 10 of them say sell, then I'm going to sell. I don't need to confirm that their buy or sell recommendation is accurate. I'm going to look at the numbers. I'm going to go with the consensus, because here's the thing. You can break down stocks and all this stuff and go through balance sheets and ratios and everything else. But how do you know what to do with that information? You don't know what to do with that information, because the reason is because it all comes down to figuring out what the fundamental value of that company is based on present value of annuity models that can wiggle based on microscopic adjustments in certain parameters within that equation. So basically, you might sit here and go through all the numbers and gain artificial confidence from the fact that you went through all the numbers. But truth is that you really don't know if that asset is overpriced, underpriced, or accurately priced. You might say, wow, this is a great company. They've got 20 lines of business and they're going to make $1 billion a year in each line of business. That don't mean it's a good investment. That don't mean you should buy. It could still be overpriced. So do not ever think that going through all the details of a company is going to somehow give you more information about that company than an analyst who sits there and studies the company 8 hours a day, 7 days a week. It ain't the same thing. Do you get what I'm saying? Give me a yes in the chat if you hear what I'm saying. All right. Hit the thumbs up button. Please take a second, hit the thumbs up button if you haven't done it yet. Let's move on. All right. So another interesting story that I saw that was really fascinating. I mean, since we're on the topic of just crazy investments, crazy investments. GameStop is a company that has really intrigued me, because GameStop is kind of an artificial manifestation of something that of a debate I constantly had in graduate school about investor rationality. Does it make sense to buy GameStop at, I think it's $170 a share, when the company was, I think trading for, what was it trading? My God, let me look up GameStop. Hold on, I'm looking on my app. Tell me if you can still hear me. Give me a yes if you can still hear me or not. GameStop, GameStop is so funny, because literally GameStop, you could have bought GameStop for $4 back in June 2020. So you could have bought GameStop for $4 in June 2020. Today, GameStop is trading for $169.47. So the obvious crazy question you have to ask yourself is, does it make sense to pay $169 in what is this, April of 2021, for an asset that would have cost you $4 in June of 2020? What has occurred? Seriously, pay attention now. Listen to me. Hear me. What has occurred in the last 7 months that makes a $4 investment worth $169? If you take 169 divided by 4, that's about 42x. Is that company 42 times more valuable than it was in June of last year? Are they making 42 times more revenue? Do they have 42 times more customers? Are they 42 times more profitable? Did they get 42 times smarter? The answer is probably no, right? And this is a constant ongoing debate, that's been going on in finance for for decades. It's what they call the risk versus mispricing debate, right? So basically, there's a school of thought that says, look, assets get mispriced all the time. Sometimes for long periods of time, the market just misassesses what the company's worth, and it's going to be worth what it's worth. The price is what it is. But then there are people who believe that eventually, at some point, chickens come home to roost, and the price deviates back to its fundamental value. Eventually, people wake up, they sober up, and they realize, wait a minute, this is a $4 company. It's like a bad relationship. Have you ever fell in love with somebody who was just an absolute piece of crap as a person? Like somebody that you would never bring home to your mama. But for some reason, for maybe about a month and a half, she seemed like an amazing woman, because she was new and fresh and you were excited about her. Or maybe that man that was garbage and you're almost embarrassed to admit that you even ever dated him. But for about 4 weeks, he was like your dream guy. You thought he was your dream guy, and then slowly but surely your reality came crashing down, your fake reality, right? Well, sometimes stocks do that. Sometimes we fall in love with companies and the prices become overinflated. And just like that person that you fell in love with for 4.5 weeks during college and realized that was literally an embarrassing, ridiculous thing to do. Well, sometimes we do that with stocks, And so right now, GameStop. What's fascinating about GameStop though is that the illusion is lasting longer than I expected. I remember when Kim Kardashian got married years ago, and I remember saying to somebody, I said, "Yeah, I don't think Kim Kardashian is going to stay married longer than 2 months," and she was married about 40 days or something. But then she marries Kanye West, and I was like, "Oh yeah, Kim Kardashian, she ain't gonna stay married no long time. That lady, who's gonna stay married to a Kardashian for more than a year?" And they stayed married for several years. Like the illusion lasted for multiple years, right? And then I get on the phone with Kanye, and he literally mentions Kim. I never mentioned it because at that time it was private, but now it's public, so I can say it. But he mentioned Kim. He mentioned what's going on with his wife, and I'm like, damn, dude, I just met you. You're telling me all about your wife. This must be terrible. You must be stressed out because I know a stressed out black man. When I talked to one, he was stressed out about this lady, and I told you, Alicia, I said, see, I told you. I did not think that was going to work because I could not understand how these two volatile people could have a long-lasting marriage. I could not see how that could happen. So with that being said, the GameStop illusion is lasting longer than people expect. For some reason, GameStop is still trading at these abnormally high prices. I swear to God, I kid you not. I never would have guessed that. How many months? Let me see. Let me look at mine. Let me open it up again. Look at the chart. 3 months later. I mean, back in June of 20, wait, is that June 21? January, I'm sorry. January of 2021, GameStop shot up to $305. Then it shot back down to the 50s in February. And now it's been since about March 9th, it's been hovering well over the 150 mark. It was at 194 March 8th, actually. So really, at the beginning of March until now, GameStop has kept the dream alive. They kept the illusion alive. Now, so what's interesting is there's a guy named Roaring Kitty who apparently is like one of the ringleaders in the whole GameStop thing. And I think Roaring Kitty is trying to prove to the world, look, I ain't playing with y'all. I'm not joking about this company. I love this company. I believe that we as a group can make this company better. They've become activist investors. The CEO of GameStop, if I'm not mistaken, just stepped down or something. Let me look it up. Let me see if I can find the news here. It looks like the CEO steps down, which is a big deal because a lot of people believe that GameStop has long-term potential, and Roaring Kitty is going to make millions of dollars because he bought some options. He bought some options on GameStop, some call options, and the shares jumped. And he was set to make millions of dollars if he just sold the options. But instead of selling the options, Roaring Kitty, who I shouldn't just call him Roaring Kitty, he probably has a name somewhere. Roaring Kitty actually did something that was really interesting. He actually expressed a vote of confidence in the company. Keith Gill, that's his name. So this guy, Keith Gill, aka Roaring Kitty, the Reddit guy who led the whole Reddit rebellion a few months ago, actually took the shares and exercised the options, meaning that he bought deeper into the company. He strengthened his long position, which was really fascinating to see him do this, right? I'm like, whoa, this guy's put millions of dollars behind what he believes. Now, does that make it a good investment? No, not really. But there is potential in GameStop for sure. And I would say, from a more rational perspective, you might make the argument that yeah, GameStop might be 3 times better than it was a few months ago when it was trading at $4 a share. So now maybe it's worth $12 a share. Maybe it's worth even 20 or 25. Is it worth $169 a share? Most analysts would have a hard time justifying that price point. Now, somebody asked, so should we buy puts? Should we sell? Whatever. You know what? Nobody can predict. Here's the thing. I can predict to you fundamental changes in corporate value. I can predict that all day. That's easy. It's just basic math. That's setting up an equation. I can set that up. It's very easy to do. I cannot predict how crazy people are going to be 6 months from now. I cannot predict the unpredictable nature of human beings. I cannot predict irrational behavior. Anybody who has a crazy cousin knows what I'm talking about. You can't predict what your crazy cousin's going to do. You can't predict what kind of man she's going to come home with. You can't predict what kind of drug little Pookie's going to be taking next week. Like, you can't predict, what day he's going to beat up his girlfriend because he's high on crack. Like, you can't predict that. right? So right now the market is high on crack, and you cannot predict a market that is on crack. Now, what you can look at is momentum. I do believe that there is such a thing as herding behavior. Herding behavior basically means the world moves like sheep, and so things go viral. Everybody jumps on trends. Like Dogecoin is continuing to take off because it was taking off. So people are jumping in because they don't want to miss out. They're getting this what is called FOMO, fear of missing out. So everybody's jumping in buying Dogecoin, not because Dogecoin has any meaningful value, not because they want to leave Dogecoin to their grandchildren. They're buying it because they believe that the price might go up this week and give them the temporary high, the shot of endorphins that comes with making money. And that's what it is, and that's fine. I'm not judging that. I'm just going to say that's I wouldn't call that the same as investing, because investing is more of a 5, 10, 20 year kind of outlook. Investing, an example of fundamental investing would be some dude who in 1988 or whatever went down to the hood and bought 20 old houses in a neighborhood that nobody wanted to live in. And then by the time, the year 2010 or 2005 comes around, he's a multimillionaire because that lakefront property is now suddenly valuable due to gentrification that he predicted many years ago, right? Or investing might be, my family owns shares of 20 blue chip companies, and we've held these shares for 25 years. And because we bought Amazon back in 2001 for $10 a share or $20 a share or whatever, it's now worth $3,000 a share. Now our family's filthy rich, and we hold these assets that allow us to all live and not have to go work for white people, right? So that's kind of what investing tends to look like. But this is not bad either. This is not ridiculous and stupid and crazy. It's just something where you have to just be really careful. So if you buy Dogecoin, then what the hell? Let's have some fun. Let's all go buy some Dogecoin. So in fact, later on today, maybe I'll do a podcast and I will buy some Dogecoin, and every day I'll tell you how my Dogecoin investment is doing, and we have something to talk about. But beyond that, I'm gonna get out of here, guys. I got a meeting, but I hope you guys have a good day. I hope you make a ton of money, and don't forget the Black Stock Market Program, where if you want to ask me investing questions and all that stuff. We meet every Tuesday at 11 a.m. That's when we have class. So if you want to do a free trial, go to blackstockmarketprogram.com. Also, if you want to join the class and do the free trial, I am doing a special lecture on Thursday night at 8 p.m. on how to make financial decisions. There was a question somebody sent me where they said, would you rather have $2 million in cash now, $4,000 a week, or a perfect 800 credit score? And a lot of people had different answers all across the board, but there is a theoretical way to kind of discuss that and a way to make those decisions so that when you run into a situation where somebody says, do you want your money in a lump sum or do you want to get payments? How do you make that decision? How do you distinguish between the two? How do you sort of, go in, the direction that's going to work for you? And I can give you some parameters that will allow you to make those decisions. And that's what we're going to cover in the Thursday lecture. So we're meeting on Tuesday at 11 a.m. Eastern, and then we're going to meet again Thursday night at 8 o'clock. So if you want to join, feel free to go to the blackstockmarketprogram.com. The first month is free, or $1 or something like that. So anyway, the URL is right there on the screen. I hope you guys have a good day. If you could, please take 1 second, hit the thumbs up button, hit the thumbs up, share, subscribe button. Also, go ahead and put your hashtag B1 in the chat. And we're out of here, guys. Have a good day. Love you. Talk to you soon. Peace.